And you know what? $3,000 isn't a number that excites me at all. I wouldn't own as much gold as I own if I thought it was going to go from $2,700 to $3,000. I own it because several times in my life, it's gone up fivefold or sixfold or sevenfold. I don't own it because I hope it's going to go to 3,000. I own it because I'm afraid it's going to go to 9,000 or 10,000.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for December 16th through December 23rd, 2024, while supplies last. This week we feature 2024 1-ounce silver eagles at just $4.85 over spot, one of the lowest premiums we've seen in years. We have a limited supply, so these are first come, first serve. Next, 2024 1/10-ounce gold eagles are just $44.99 over melt per coin. And finally, 1/10-ounce Gold Britannia are just $29.99 over melt per coin. All of our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always delighted to have this widely followed and legendary investor, returning guest, Rick Rule, the former CEO of Sprott Asset Management, now the CEO of Rule Investment Media, joins us this Friday, December 20th, 2024. Rick, thanks for coming back on Liberty and Finance.
Donegan, thank you for having me back. Best of the season to you. It's always a pleasure to have discussions with you in front of your audience. Thank you.
We all love those opportunities. We learn more than one would even believe possible by just paying attention. And also blessings to you and your family and to all of our viewers out there in this Christmas and holiday season. As we head into it, we are in good hands. We've got to keep that in mind as we see a lot of volatility in other aspects of our lives. We'd like to blast into a rapid fire question and answer session with you here. We've got so many questions that have been submitted by viewers. They are fairly wide ranging. I think you'll enjoy it. I know I will, and our viewers are likely to. And so then we're going to talk at the end about your upcoming gold investment boot camp that's coming up in January. So first of all, Felix the Cat 69 says, I've asked before when Battle Bank is opening. Rick said they were buying another bank to circumvent some regulatory hurdles. What date is it opening?
We anticipate, and by the way, my track record with regards to opening date, unblemished by success. We are anticipating being open in March or April of 2025. I'm sorry. We have a letter of intent in place to buy a small bank with a national charter. We need the change of business plan to be approved, but importantly, we don't need that to be approved by the FDIC. We need it to be approved by the Office of the Comptroller of Currency. They are the tough regulator, but last time they approved our application in 97 days, while the easy regulator, the FDIC, was 2 years, 7 months and counting. So, hopefully, this time I'm right.
We could tell some really interesting stories about getting response from government regulators, and I won't. But anyway, the follow-up question is, I would like more information on the security of their vault for storing metals. I think there's a clarification needed there, and you're sure to provide it.
The vaults will not be Battle Bank vaults. We will store customers' physical precious metals, whether they store the gold with us or with their dealers, and we lend against it, in vaults owned by publicly traded companies so that we can audit their balance sheet and their income statement to make sure that the vaults offer secure delivery. At present, those vaults would be Brinks, Loomis, or Viamat. There are doubtless other vaults in the world that are worth doing business with, but out of an abundance of caution, if I can't see the vaulting company's balance sheet and income statement, and if I'm not assured that they don't follow best practice audit for their inventory, I have no interest in risking your bullion or my collateral.
Fair enough. And next question takes us into the idea in the arena of silver discoveries. Christian Siegel says, what's your opinion of BlackRock Silver's high-grade silver discovery in Tonopah, Nevada?
It is a high-grade discovery, but it's small. I like silver discoveries. Well, I like silver deposits in the 100 million ounce range. What I've learned in my career, sadly, is that small mines can only make me small money, but they have big risks. Big mines, while they have big risks, can make me big money. So I don't follow that company particularly well, and likely will not unless I see the possibility that it exceeds 100 million ounces in measured, indicated, and inferred resources. What the questioner says with regards to the grade is true, although he needs to know that those Walker Lane deposits, those epithermal deposits, are often very narrow veins. And so the mined grade might vary a lot with the reported widths, the grade in the reported widths, because you'll have to take a lot of wall rock to get at those narrow veins.
We're still in natural resources here. This one is about oil companies. There are two questioners here. Noah Peachy says, "Hey Rick, based on my research, XOM and CVX break-even price per barrel of oil in the Permian Basin is around $60, and Saudi Arabia needs $89 oil to balance their budget. Would you agree? Why or why not?"
Well, the Saudi budget includes an awful lot of diversion for social spending. You need to understand that. You're not talking about the Saudi Aramco budget. You're talking about the oil price that is required to sustain the Saudi state on top of production. The Saudis' discovery cost and lifting cost is very low compared to Exxon's discovery and lifting cost. But Exxon isn't similarly burdened by that very large state, although it would be interesting to hear what role they play ultimately in funding the U.S. budget. I suspect that at the current cost of capital, that Exxon's real operational cost in the Permian Basin is less than that. The $60 number, I suspect, correctly layers in the cost of capital and the allocable share of Exxon's overhead, which goes to the Permian Basin. But I suspect that the true operational cost in the Permian Basin, before general and administrative and before cost of capital, is substantially lower than $60.
Still on the topic of Exxon, Cajun Jameis 9001 asks, XOM, will it come back up?
Of course. Function of time. A few things get in the way of Exxon in the near term. One would be improved prospects for peace in the Middle East. I think there is a bit of political risk premium built into oil. The second would be peace in the Ukraine. Both of those are bigger than me. I'm a credit analyst, not a political analyst. The third would be the threat of recession and depression. A global economic slowdown means that you can have supply shortages if you have a demand shortage, and the price doesn't have to move. If one is prepared, as I am, to hold Exxon for the rest of one's life, I'm 71 years of age for the record, almost 72, then you don't worry too much about near-term perturbations in price. Note, too, that some of the pain of holding the stock is taken out because of its generous and rising dividend.
Understood. Still in the area of fossil fuels, Momo Chacha 1235 says, Rick mentioned U.S. natural gas as a deeply undervalued asset. However, due to stockage and production level, might still need to wait 3 to 5 years. One important question to please ask, does Rick see the possibility that U.S. natural gas price goes below zero like oil in 2020? It's important as, frankly, we produce too much versus stockage level now, and as retail, the way to get early in this commodity is through CFD or ETF on futures contracts.
Permian Basin gas goes below zero not infrequently now, which is to say that the producers have to, if it's legal, flare it, and if it's not legal, literally pay somebody to take it and store it. So the circumstance that the questioner asks is a real one, not a hypothetical one. And I can't tell you when that's going to be over. What I can tell you is that high-quality U.S. gas producers like Devon, like Equitable, are dealing with this. The stocks are stupidly cheap, even at current prices, with regards to the cash yields that they're generating. There are literally billions of dollars spent every month on gas gathering, gas storage, gas transmission, and gas liquefaction plants. There was a de facto ban on new gas liquefaction in the Biden government on the Eastern Seaboard. No legislated ban. There was just a go slow. My suspicion is that one aspect of the Trump administration will be the absolute end of a go-slow regulatory environment with regards to oil and gas transmission and gas liquefaction on the East Coast. This won't impact gas demand for probably 3 or 4 years. But when it does impact gas demand, I think it impacts it with an absolute bang. The second thing that's happening right now is the radical movement of, in particular, German industry, gas-dependent German industry from Germany to the U.S., to the Gulf Coast, to the Eastern Seaboard, to take advantage of U.S. natural gas. Finally, with regards to natural gas north of the border in Canada, it would appear that the Canadians have decided to thank and excuse their prime minister. This gentleman inexplicably sees no business case for natural gas, I guess because he wouldn't allow it. To the extent that the Canadian voters thanked and excused him, I think that you would see an immediate debottlenecking of Canadian natural gas. The end of Prime Minister Trudeau and the possibility of a more gentle regulatory environment with regards to transmission in the U.S. should be extremely bullish for Canadian natural gas, which is even cheaper than American natural gas.
Still in the energy arena, turning attention to uranium, Mr. Booch 526 asks, "Hi, Rick. I've begun to build a uranium portfolio, and my work so far indicates possibly a 15-year lag for significant performance if reactor technology improvements accelerates as I think it will. What are your thoughts on regional nuclear adoption in North America?"
I think we're going to go reasonably slow with regards to conventional reactor adoption in the United States. What is happening in the United States is that planned shutdowns are being scrapped. The growth in near-term uranium demand is a function of the continuation of Japanese restarts and the incredible pace of Chinese reactor construction. Certainly, we are going to see increasing utilization of uranium regionally and globally, but that isn't going to impact demand for 6 years or 7 years. The near-term impacts on demand are going to be the extension of existing plants that were slated for shutdown, the Japanese restarts, and as I say, the incredible pace of new plant construction, particularly by the Chinese. Looking further out, there's a whole different part to his question, which goes to technology. To the extent that fusion technology ever became possible, it's only worked at a bench scale so far. That would reduce uranium demand fairly substantially. It would be wonderful for humankind, but it would be lousy for the uranium industry. Another thing that would be lousy for the uranium industry and humankind would be, and we have to keep this in the back of our minds, the repeat of a Fukushima or 3 Mile Island circumstance, which is to say a plant disaster, which would shut down very, very, very quickly the wonderful groundswell of political support for the uranium industry. The other side of technology is all wonderful for uranium. The adoption of small modular reactors, negating a bunch of the upfront capital cost. The probability that very small reactors could be used in shipping. When people say this is something in the future, the U.S. Navy, which has 40-something of these reactors in place, says, really? This future was 30 years ago for us. So in that sense, there's a very bright future for uranium. It's important to know, though, that future is 6 years from now, 7 years from now, 10 years ago. The net present value of that demand at an 8% discount is zero.
Let's see, I missed this question about Battle Bank. I'm sorry, we're going to circle back to Battle Bank, and then we got a bunch of gold and silver questions. Brian Kuntz 9711 says, Rick, it's been quite a wait for Battle Bank. I first have several questions. First, what will be the scope and availability to aid depositors with investing internationally? And
the scope of Battle Bank with regards to international diversification will simply be in currencies. We will allow U.S. depositors to bank, which is to say buy certificates of deposit, in 20 currencies, not just the U.S. dollar. In our prior effort at Everbank, that was an $8 billion product. One of the interesting byproducts of that has been for first-generation Americans, immigrants, who do business both in their country of origin and in the United States. The ability to bank in both currencies was very useful. And we have the ability to facilitate transfers from, say, Australian dollars to U.S. dollars or U.S. dollars to euros, assuming that somebody banks with us in both currencies, very cheaply. Those services are provided by the large chartered banks too, but at 4 times the price that we charge.
We have some questions, speaking of currencies and the different advantages to investors and holders of different currencies. Monty Boy 711 says, as a Canadian, should I be concerned about holding Canadian resource stocks while the Canadian dollar is falling versus the U.S. dollar?
Depends on the type of resource stock. One of the interesting things about the resource industry, particularly non-U.S. domiciled industry, is that their costs are often denominated in their home currency, while the selling price of their product is in U.S. dollars. So as an example, if you're a gold producer in Canada, you sell your product for U.S. dollars, but your costs, your energy, your labor, your cement, your steel, are priced in Canadian dollars. A falling Canadian dollar is a benefit to a company that sells its product in U.S. currency while paying for its costs in their domestic currency.
Related question, but different. Rockman asks, should I hold some dry paper in Canadian dollars, U.S. dollars, or euros?
My gut feeling right now would be U.S. dollars. I laughingly quote Doug Casey, who famously said the U.S. dollar is the worst currency in the world with the sole exception of all of the others. It could be that the Canadian dollar gets an intermediate term boost from the impending unemployment of their prime minister, the hopefully impending unemployment of their prime minister.
And now turning to gold and silver and other commodities, Jack Wiki says, when it costs £5 for a Diet Coke in the pub, it demonstrates the cheapness of silver. I just took a peek. Silver today in United Kingdom, pounds is 23.5 roughly. So £5 for a Diet Coke and 23.5 for an ounce of silver. Which other assets would you consider buying?
Well, I said North American natural gas, although you can't buy it physically. And I'm as you know, Dunnigan, I'm an unconstrained gold bug. I would suggest that people have at least 5% of their net worth in physical gold. And I would suggest that they hope it goes down in price. The set of circumstances that causes your gold to go up rapidly in price, which I think we're likely to see, are invariably fairly unpleasant. But certainly if silver is cheap, gold is cheap too. Gold generally moves before silver does, although silver, when it moves, generally moves further and faster. If the question goes to holding physical commodities as opposed to holding equities around physical commodities, the most convenient to hold and store are gold, silver, and platinum and palladium.
All right. This is a contra question from Alan Evans. With a view to diversification, can one be too concentrated in gold and silver bullion?
Yes. Many, many, many investors are. It seems that when investors get bitten by the gold bug, they often go whole hog. In my life, when gold has moved, the moves have been dramatic. And if you think of it as I do, as insurance, a fairly small premium goes a long way. If, as an example, you had gold at the beginning of the decade of the 70s, understanding the type of inflation that we would experience in the 1970s, when the gold price moved 30-fold, had you had 10% of your portfolio in gold, you would have enjoyed a triple over that decade on your total portfolio. If you had gone through a much more modest bull market, like the period 2000 to 2010, where the gold price went from $250 an ounce to $1,750 or $1,800, which is to say a 7-fold increase, a fairly small proportion of your net worth in gold would shield most of the rest of your portfolio from the harmful impacts of the deterioration in the purchasing power of the U.S. dollar. Many, many, many people overinsure. Many, many, many people have too much of their assets in physical precious metals or more riskily in penny stocks associated with gold and silver.
I guess the concept of many when you've talked to us about how few, what a sliver of the population are actually invested in precious metals, maybe you mean among those who are.
Correct. I have now, as you know, Donegan, graded over 100,000 portfolios in 10 years of grading portfolios. And while I realize that $100,000 is a fairly small set of the investing public, I do note that when those people, some of those people, get bitten by the gold bug, and I suspect a high proportion of them are your listeners, that they tend to go overboard.
Here's a question related to the pricing of and gold and silver. John Hill, 8406 says, owning such a lot of gold, what influence can China, Russia, or the BRICS nations have on the price? It appears that the gold-silver prices are still being set by COMEX, even though most of the gold or silver seem to have migrated eastward.
That's a really interesting question, and I need to begin my answer by saying I don't know, but I'd like to discuss it. The gold and silver price is nominally, at least, as is suggested, set by the LBMA and the COMEX. It's important to note that most days, the futures market in precious metals trades over 100 times the amount of gold and silver available for physical delivery. To the extent that increasing amounts of physical gold in particular are removed from access to COMEX, you set up a circumstance where perhaps ultimately the tail stops wagging the dog. I'm not saying for sure that's going to occur, but I think it's a very interesting circumstance. And it's interesting to note, too, that when that happens, many people who suggest the inevitability of, pardon me, the inability of that to become a problem forget the fact that in order to settle COMEX or LBMA obligations, the physical gold and silver has to be good delivery, which is to say all the scrap gold and silver, all the gold and silver outside the system, all the gold and silver held by the Indian peasantry, can't automatically be used to fulfill those obligations. It needs to be often re-refined, re-assayed, and entered into good delivery. So the circumstance where the continued warehousing of gold by foreign central banks begins to disrupt the availability for good delivery in a market where 100 times the amount held for good delivery trades every day becomes an increasing challenge. I would tell people, too, that one of the reasons why you should hold your physical gold and silver in system available for good delivery is that very often if you're engaged in midnight gardening, which is to say if you hold the gold and silver yourself in your backyard and you want to take advantage of price movements, short-term price movements, you need to reintroduce that gold or silver into the system. I'm not suggesting that there aren't other reasons to have physical gold and silver in your possession as opposed to in system. But if you are using it as investment liquidity, it's important that you have some in system where it actually is liquidity.
Your comments on this next one about Randy Osborne 3971 says, the constitutional framers seem to be the smartest people to walk this earth. No two-party system, just a constitutional republic and sound money. Your thoughts?
I think that the framers of the Constitution, on balance, did a good job, particularly with regards to the Bill of Rights. You will notice that politics triumphed then, too. Those rights were not extended to indigenous Americans. They were not extended to African Americans. They were not even extended to women. Some people would argue that that's wise. I'm not one of them. I think, I'm guessing, I wasn't there, despite the appearance that I was. I suspect that the framers of the Constitution, particularly the people who inserted the Bill of Rights, would have preferred that the rights that they enumerated were universal. But that's not the way politics works.
We have one last question on gold and silver before we turn to talking about your upcoming gold investing bootcamp. Scott Richards, 54, says, gold and silver to $3,000 and $50 very soon. Would you agree?
No idea about very soon. And you know what? $3,000 isn't a number that excites me at all. I wouldn't own as much gold as I own if I thought it was going to go from $2,700 to $3,000. I own it because several times in my life, it's gone up fivefold or sixfold or sevenfold. I own it because the net on-balance sheet and off-balance sheet obligations of the U.S. government exceed $120 trillion. And those obligations, both on and off-balance sheet, annually exceed the gross income of the federal government before expenditure. That's why I own gold. I don't own it because I hope it's going to go to 3,000. I own it because I'm afraid it's going to go to 9,000 or 10,000.
Now, speaking of gold, you've got an upcoming 100% virtual boot camp where people can attend at a very low cost and without ever leaving their home, and they can get access to recordings if they can't make the live event, and it helps to prepare them to be more successful at and more informed gold investors. Can you tell us when this event is and what people can expect if they participate?
I believe it's January 11th, if my memory serves me well. Thank you. Albert Liu does things like that. I just show up when I'm told. Now, I think a lot of your listeners have attended our boot camps, but for the benefit of those who haven't, the boot camps are 8-hour-long live deep dives that are broadcast online. 8 hours around one topic. We've done uranium, we've done silver, we've done development, we've done a lot of things. It's important to note at the beginning that these are not entertainment products. If you're the kind of person who used to buy the newspaper for the funnies, these are not for you. When I say deep dive, we pack a lot of information in 8 hours. Some of the words that are used, you are probably going to have to Google or Wiki. We don't talk down to our audience. And when I say 8 hours, that's the down payment. We're going to give you more information in 8 hours than you can absorb in 8 hours. So after you've listened it for 8 hours, you're going to have to rest. And then you're going to have to listen to it for another 8 hours. And likely, a month out, you're going to have to refresh your memory and listen to it for another 8 hours. So if you aren't prepared to donate 24 hours of your life to learning a lot about gold, please don't come. Please don't come for two reasons. I don't like disadvantaging my audience. I don't want to cause harm. I want to do good. Also, don't come because for 28 years in my educational products, I've offered an absolute ironclad money-back guarantee. If you don't think that the information that we've given you is worth your tuition, you email us and we give you your money back. I'd prefer not to have to give you your money back. Over 28 years with this money back guarantee, we've had to refund less than 0.1% of the tuitions that we've charged, precisely because we disclaim it so aggressively in the beginning. If, by contrast, you are interested in gold, if you're interested in all aspects of gold, the hows and the whys, a discussion of various forms of physical ownership, a discussion of the surrogates for physical ownership, things like Mokata certificates, Perth Mint certificates, segregated storage, unallocated storage, home storage. We're going to discuss these in gory detail. We're going to talk, too, about byproduct investments by way of securities markets, which is to say senior gold stocks, intermediate gold stocks, junior gold stocks. We're going to cover the waterfront in gold investing in 8 very, very complex, very, very dense hours. If you are or would like to be a gold investor, I suggest that this is invaluable information to you. If you're a tourist, give it a pass.
And Rick, you mentioned in passing earlier, you've graded over 100,000 portfolios, and that you've done that free of charge to our viewers and other viewers. And we have now well over 100,000 viewers across our various channels on our platform, not just YouTube, but Brightan, Rumble, and others. What should people do if they want to take advantage of your free advice giving of grading natural resource portfolios?
Yeah, I should mention, we have a database now. We follow over 800 companies. And when I say we, it's we. I grade the portfolios, but we have a team that maintains this database. All you do is you go to ruleinvestmentmedia.com and you list your natural resource stocks. If we follow them, we will assign a ranking, 1 to 10, 1 being best, 10 being worst. We will comment on individual issues if we think our comments have value. There's also a question and comment section where you can ask more specific questions, and if they're questions that we believe we can answer, we will answer them. Once again, ruleinvestmentmedia.com. List your natural resource stocks. Absolutely no charge. Absolutely no obligation. Please, please, please. No crypto. No tech stocks. No pot or psilocybin stocks. Just natural resource stocks.
And now a final question. I've been saving this one. This is a gem. Etulki Meridevi says, Rick, what do you think one has to keep in mind and preparations for oneself and their family to be funny and pragmatic like you in stressful times?
I guess 71 years on Earth has given me a sense of humor. I'm not often accused of being humble, but to the extent that I am humble, I've certainly earned it by lots of mistakes. Somebody suggested to me the other day that I leave the country. They said, if you don't like it, you should leave. You should pack up and leave. And I was thinking about that for a while. And I thought, no, that's not right. I should cause them to leave. And in order to do that, I have to maintain my sanity. If my choice is between laughing and crying, laughing is better than crying. And frankly, a message that's delivered to an audience without hate, without spite, that's delivered to an audience with love and with humor, I think finds a more ready audience, or if not, at least finds a better audience. I'm not looking for a hateful or spiteful audience. I'm looking for a humorous and kind and loving audience. So I hope that answers the question.
That's very kind. And our viewers and myself, we are grateful for your presence here. Every time that we can get you and spend time with you, we all learn something, and some of us learn a lot of something. So thank you, Rick, for joining us here again on Liberty and Finance.
Always a pleasure, Dunnigan. Absolutely the best of the season to you and your family, and the best of the season, too, to all of your listeners.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for December 16th through December 23rd, 2024, while supplies last. This week we feature 2024 1-ounce silver eagles at just $4.85 over spot, one of the lowest premiums we've seen in years. We have a limited supply, so these are first come, first serve. Next, 2024 1/10-ounce gold eagles are just $44.99 over melt per coin. We also have an incredible deal on XF $20 gold Liberty coins at just $75 over melt, one of the lowest premiums on pre-33 gold we've seen in a long time. And finally, 1/10-ounce Gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.